Well, hi guys, welcome to this Money Control live stream. You're watching Morning Trade with me, Nandita Khemka. Well, lots of cues to digest today, given the fact that, we have a brand new week. We clocked a winning week last week, and the cues coming out of global markets are mixed this morning. But nevertheless, the GIFT Nifty hinting at a slightly positive start for us around that 19,800 mark. But of course, we'll be discussing lots of stocks that will be in trade today, including the likes of Cipla. And of course, IT stocks that had a fairly good run yesterday. And we'll also be taking up all your stock-related queries, with our technical expert on the show. So if you have any queries, send them in to us and we'll try and take them up. But before we go any further, let's take a look at the top headlines at this hour. Wall Street clocks gains for the third straight week as key indices continue to rally on easing inflation. The Nasdaq has rallied as much as 10% so far in November. Meanwhile, Asian markets opened higher this morning with the GIFT Nifty, as I mentioned, signaling a start around that 19,800 mark. Crude prices come off 4-month lows as the Brent rises over 3% on Friday to about $80 a barrel. However, oil prices end lower for the fourth straight week on concerns over lack of demand. All eyes will be on the OPEC Plus meeting later this week. Keynes Tech and Sirma SGS will be in focus as they are among the 27 companies that have got the approval for IT PLI scheme. The scheme is likely to result in additional investment of 3,500 crore rupees and subsequent production of 3.5 lakh crore rupees. Also in focus today will be the likes of Exide Industries and Cipla. We will be watching out for these stocks as well. OpenAI's board of directors on Friday fires Sam Altman and replaces him with Chief Technology Officer Meera Murati as it loses confidence in his ability to lead the company. Reports, however, now suggest that the board is now looking to bring Altman back as CEO. And heartbreak for over 1 billion Indians. Team India loses to Australia in the final of Cricket World Cup in Ahmedabad. Australia chased down the 240-run target set by India with over 40 balls to spare. Meanwhile, Virat Kohli, of course, awarded the player of the tournament for his spectacular run-getting spree during the rest of the World Cup. Well, yeah, it was a pretty disappointing day when it comes to Indian cricket. But let's not forget that, these men in blue have put up a spectacular performance with 10, straight back-to-back wins. Of course, it was, in fact, luck wasn't in our favor. And of course, the best team won. But that, doesn't really take away from the Indian team's performance right through the tournament. But with that, of course, let's shift focus to the markets. This morning, GIFT Nifty hinting at 19,800. And last week, we had a fairly good run with both the Nifty and Sensex gaining somewhere around 2% for the week. Let me get on board Aamar Singh, who's a Senior Vice President at Angel One, and ask him about what the setup looks like this morning. Great to have you on the show, Aamar. 19,800 or thereabouts, it was a level that we reclaimed last week, albeit briefly. But do you think we will be, making a dash at that mark once again? And, what do you make of the kind of up move that we saw on the Nifty IT index for the week?
Yeah, I would say that what we saw last week was also a broad-based rally, because if you look at the mid-cap and the small-cap, they've also clearly outperformed Nifty last week, and Nifty managed to witness a significant up move. It was only, I would say, the banking sector and the Bank Nifty which pulled down some of the gains. Otherwise, Nifty would have been on a different trajectory altogether. Having said that, I would say that technically, if you ask me, somewhere around 19,850, 19,900, that's going to act as a zone of resistance, because that was earlier a major top which the market was unable to breach, and then it breached and made a record high. And again, then we are back around to those levels. And also, if you look at the options data, we see that there's been long unwinding and also short build-up happening in Bank Nifty. So that tells me that these are the levels that needs to watch out for. But I would say overall, there are positive triggers in terms of lower crude oil prices and also fears of rate hike. That's no more there, at least in the present scenario. So that's what's helping the markets. And also global cues have been fairly, I would say, okay, if not very positive. And yeah, the US inflation data definitely helped a lot. So overall, market factors are neutral to with a positive bias. And technically speaking, as I said, 19,850, 19,900, that's 19,900. That's going to act as a zone of immediate resistance. However, how Bank Nifty plays out is something that needs to be watched out for, because HDFC, ICICI, how and SBI and Kotak, how these banks perform today and the week. In this week, that's going to be important. As far as Nifty IT is concerned, we've seen some very good moves in the IT space. And also what we saw is that be it Infosys, be it HCL Tech, be it TCS, they've all witnessed an upmove. And apart from that, the mid-cap and the large-cap IT stocks have also witnessed a strong move. So that tells me that there is an upside, but one needs to be slightly cautious as most of the IT stocks are leave the large caps. They are very close to their key zone of resistance, except persistent, which is at record highs. So that really tells me that there could be some selling pressure there till we don't see the highs being taken out.
All right, that's the view, of course, on the Nifty, where we are headed. 19,850 looks like a good level that we can retest, and of course, that view on the IT space as well. Hold that thought, Aamar. We'll come back and talk about specific stocks with you. But let me also bring on board, Kunal Shah, Senior Research Analyst at Carnelian Capital, joining me this morning. Well, great to have you on the show, Kunal, as usual. I also want to get in your thoughts on the IT space. This morning we have a report coming in from Jefferies, wherein they have said that there is, they met managements of 7 IT firms, and they've said or they've observed that the demand uncertainty persists for IT firms, and there is increasing revenue leakage and deeper furloughs in the third quarter expected, and near-term growth outlook still remains weak. But we saw a very good rally coming in the IT pack last week, and IT stocks have done fairly well over the last few months, right? Even though earnings were pretty much soft as expected in the second quarter. What is it that's driving so much interest around these IT stocks? And do you think valuations have run out of comfort zone after the kind of upmove we've seen?
Hi, good morning in the first place. Thanks for having me. Particularly speaking for IT, answering your question on valuations, to be very frank, I don't feel so, except for few stocks in the mid-cap space, right? Valuations are like really in the euphoric zone or have kind of caught up. So there's a lot more valuation comfort in the large cap IT space. So that's on valuations, except for mid-cap IT space. There's a lot of valuation comfort still in large cap IT names. Second, coming on the demand scenario, somewhere we believe that the bottom for the demand scenario has kind of been done. If at all anything has to be there, it has to be improvement from here on. We saw a few large cap IT names already commenting on the call, right, that second half will be better than the first half. Also, yes, some IT names did cut down their guidance, but the order book wins will have to be seen for the revenue to come by in the next financial year. So that's the take on IT. Except for mid cap IT names, large cap IT seems fairly valued. Seems at a comfortable zone.
All right, large cap valuations are still in the comfortable zone right now. But what about the Realty pack? Of course, we saw earnings comfort for Realty majors like DLF, strong pre-sales. There's strong luxury housing sales as well, and that was reflected both in earnings as well as the stock prices as well. And Nifty Realty Index also was up somewhere around 5% last week. Do you think there's more steam left to this rally?
We don't track many real estate stocks, but the underlining for the sector that we get is for that high ticket loans, there is obviously some bit of demand, and also in tier 2-3 cities, there is a little bit of demand for small ticket size loans. But with the rising interest rate scenarios and housing EMIs kind of going up, really the sustainability of this demand will have to be kind of seen. Also, when it comes to listed players, there are very few large national real estate players, so in a way it's better to play through ancillaries, which will kind of benefit because of the uptick in the real estate demand rather than directly playing the real estate plays in our view.
Right. Also want to get your thoughts on the banking and NBFC space. Of course, RBI's crackdown on unsecured loans. We saw the Nifty Bank, in fact, some of the private sector as well as PSU banking names taking it on the chin. Of course, experts believe that NBFCs will be more impacted by this crackdown. So in light of that, what are your thoughts on the likes of Bajaj Finance? Because of course we've seen the RBI clamp down on two of its products where it was asked to not disburse loans under those products, right? So it comes as a double whammy for the likes of Bajaj Finance, right? So within the NBFC space, do you think it's time to exercise caution and perhaps stay away from this now?
Well, Nandita, actually what is happening, there has been robust credit growth for banks and NBFCs both in the unsecured piece, because all of them have been focusing on the personal loans and related unsecured loans, which have been growing at a robust pace. So RBI did mention a few days back that, they are seeing some kind of stress in loans with ticket size less than 50,000 rupees, right? So this was somewhere, going to come in some form or the other. Well, it's bad for NBFCs in comparison to banks, largely because the cost of funds for NBFCs in any ways are a little higher in comparison to banks. And now with this coming up, the capital adequacy requirements going up, the cost is further kind of going to go up, which will temper down the growth that we have been seeing so far. Basically in the NBFCs and also in the banks for the unsecured piece. Coming to this particular name, yes, in the short term, there will be headwinds for new addition clients. About approx 20 to 23% of the new client additions that were happening through these two particular products. So that, along with cost of funds, I don't think so. Cost of funds is the bigger issue for Bajaj Finance, but it's more to do with the growth and the clamp down on these new two products, which will have to be seen going ahead.
All right. Of course, we'll have to see, the growth of these two products, which have, of course, faced the RBI's action. And, the company has been forced to stop disbursing loans under these two products. But let's also talk about, the second quarter earnings season that has just concluded. Kunal, your big takeaway from this earnings season, which sector really stood out for you, which has both earnings comfort going forward as well as valuation comfort?
Pharma was one of the sectors which kind of came out with very good numbers in certain set of pockets because of Indian pharma market doing very well. Along with that, easing pressures in the US market, helping the profitability growth. So I think pharma is something we should kind of continue doing good for another year or so. And valuation comfort is also there in certain pockets when it comes to pharma. So pharma, for sure, stands out when it comes to this quarterly numbers. Other than pharma, few auto names also came out with decent set of numbers, and momentum should kind of continue for them. So few pockets in auto and also did very well. Banks, we believe, are in fair value zone. With economic growth to happen and the NIMS pressure behind, they also have to kind of join in the rally very soon. So that's another set which looks reasonably valued and should kind of continue to kind of do good. And the next leg would be IT, which numbers are not doing, but somewhere we believe they would bottom out in a quarter or two, and there is money to be made in that pocket as well.
All right, banks, pharma and IT, these pockets are looking fairly valued at the juncture. With that, Kunal, thanks a lot for taking out time and joining in this morning and sharing your thoughts with us. Look forward to having a longer conversation with you soon.
Pleasure.
Well, with that, let's go back to Aamar and talk about specific stocks. Aamar, Cipla, according to me, this should be the stock of the day, given the fact that the company's Indore unit has got a warning letter from the US FDA. In fact, new approvals will be put on hold from this plant, and the company is, in fact, working on transferring, approvals for one of the products to another site. This is something that was expected by the street. It has been factored in. Back in Feb 2023, 8 observations were issued by US FDA on this particular plant, and a warning letter was in fact issued in, of course, November now that it has been issued. So that was something which was largely factored in by the street. Do you think now going forward, Cipla, looks like it could head higher from here? Or do you think this could come as a bit of a setback and we could see some bit of a cool off in the stock?
Yeah, I would say that if you look at Cipla, technically on the charts from the long-term perspective, the stock continues to be extremely strong. And also the momentum which has been there for quite some time now since Cipla started moving up from the 900 levels to currently trade around 1250 odd levels. So the long-term momentum is there. Yeah, on the short-term momentum and the intermediate-term trend, what we are seeing is that we are seeing some sort of consolidation happening. And also the recent high that Cipla had made in the second week of August of around 1277 level. So that's a level to watch out. So anywhere between, I would say 1280, 1300, that's a very important level to watch out for because it's trading at record highs around those levels. So that really tells me that there is a strong possibility of that level being taken out, but we'll have to watch out for because some of the short-term technical indicators, they show that there is some sort of consolidation and also some sort of profit booking happening around the current level. So rather wait for the 1280, 1300 level, which is going to act as a very strong resistance zone. Or on the downside, we see that the stock has now formed a very strong base around the 1150, 1160 zone. So that's a zone of support that Cipla is currently displaying.
All right, levels of somewhere around 1300 could act as a strong resistance zone for Cipla on the charts. But on that note, let's talk about some other stocks in news this morning. Exide Industries. Now, this company has settled its long-standing dispute on use of fluoride mark in India with two firms, Vertiv Energy as well as Vertiv Company Group. The stock, has been on an upward trajectory. If you look at the 6-month performance, I think the stock is up somewhere around 6% or thereabouts. In fact, 39%, I beg your pardon. On Friday itself, the stock was up somewhere around 3%. Do you think most of the positives are literally factored in when it comes to this stock and it could perhaps be poised for some bit of profit booking, or do you think it could head to levels of somewhere around 300 or thereabouts now that it has cleared its 52-week highs?
Yeah, I would say that the long-term trend for this stock remains extremely strong, and that I'm talking about the quarterly chart. So that clearly tells me that the structure has definitely changed from a long-term perspective for the stock. So any correction in this stock should be used as a buying opportunity. What we see on the short term is that over the last, I would say 8 to 10 trading sessions, we've seen a significant increase in volumes, both on the delivery side as well as the daily volumes which have there. That shows that there is interest, a lot of interest in the stock, even at the current levels. Having said that, if we go back in time, so somewhere in, I would say it was in September, somewhere in September 2018, the stock had made a high of 304.7. So roughly 300, 305, that's going to act as a zone of resistance because that's the all-time high which the stock has earlier reached. But looking at the long-term, I would say technical indicators and the strength of the market, there's a very high possibility that once that level is taken out, the stock is definitely going to rally towards, or there's a very high possibility of it rally towards 345, 350 odd levels. But that's the level to watch out for, 305. I would say 300 to 305 on the upside, or maybe you can take it to 300 to 310. That would be more appropriate. So the stock structure remains very strong on the long term. Short term, also bullish momentum is there. And on the medium term, we've seen the stock pull back from almost oversold territory. So that tells me that that's the level to watch out for.
All right. We had a query coming in on Exide from Naveen. Hope, Aamar's answer helps you. And of course, he's mentioned the levels that one must be watching out for from a short to medium term perspective. And of course, long term trajectory looks pretty strong for this stock. Moving on to the next query that we are getting in this morning, Aamar, this one is coming in from Shubham Gupta, wants to understand your thoughts on HDFC Bank. Of course, the stock has, underperformed, in tandem with all its private sector PSUs. In fact, private sector peers, I beg your pardon. Stock is hurtling towards its 52-week lows. Of course, analysts have already flagged off that, the merger overhang could continue for the next couple of quarters. So margins could be under pressure. So would you say this is the right time to buy into it, to wait it out for the recovery, or do you think it's an avoid right now?
If you look at the different time frames for HDFC Bank, I'm talking about the monthly or the quarterly, they really have not been going anywhere, because that was clearly the trend was set many months back that the stock is not going anywhere and it's not going to break its all-time highs, because that was more of a double top formation on the long-term chart. So that clearly spelled out that the stock is not in for a rally. Now what we are seeing is that the stock has been gradually witnessing a sell-off from almost 1700 levels to currently trade around the 1500 mark. And on the daily charts, however, we see that there is some strong support coming around the 1450 odd levels, from where the stock has bounced back. But again, if I look at the medium-term, intermediate-term trend, that clearly tells me that, again, on the upside, if the stock rallies towards 1550, 1560 levels, that could be a level where we could witness some selling pressure. But going forward, we see some sort of consolidation in the stock. However, if 1450 levels is taken out on the downside, then we could see the stock headed lower towards the 1380, 1400 mark. Because the long-term charts, they're not very, I would say, positive as of now. So the levels to watch out on the upside is 1550, 1560. If that's taken out, the stock sustains over that level, then we could say that there is an imminent chance of a trend change. Otherwise, the trend remains, I would say, biased towards the negative.
All right, negative setup, or in fact weak setup on the charts for HDFC Bank. Hope that answers your query. The next one is coming in from Trilok. Wants to know your thoughts on Max Health, both for the short as well as the long term. Stock hasn't done all that poorly on a YTD basis. It is up in excess of 35% or thereabouts. And the likes of Apollo Hospitals and other healthcare stocks have also had a fairly good run. How do you think Max Health is now poised on the charts, both for the short as well as long term?
I would say from a long-term perspective, the stock continues to remain strong. However, what we are seeing on the weekly charts is that the stock is forming a triple top. So if we go back in time, so somewhere in September, it had made a high of 628. And then if I go back, so again in June, it had made a high of 630. So that's a level to watch out for, 625, 630 on the upside. If that level is taken out, then we could see a significant upside in the stock towards the 645, 650 levels. The long-term charts continue to remain strong and positive. There's no doubt about it. However, from a short-term perspective, these are levels. So what's happening is, the moment the stock reaches around 615, 620, we are seeing a lot of profit booking coming into this particular stock, because the markets are looking whether it's able to breach the 630 on the upside. And on the daily charts, we are seeing that there has been some interest, but these are the levels to watch out for on the upside. Downside, if you ask me, somewhere around 560, 570, that's a zone of support which stock has built over the past few trading sessions.
All right, that's the view then on Max Health. I hope that answers your query. A couple of more queries that we can squeeze in today, of course. Pavitra wants to understand your thoughts on UPL. Now, this stock, UPL, has been a clear underperformer. In fact, it did hit a fresh 52-week low recently. Do you think there is more weakness on the charts? And, if one is invested in this stock, how should one go about safeguarding their investments?
See, I think the worst seems to be over for the stock, because the stock, despite the market witnessing significant rally, the stock has been in a downtrend. So this is a downtrend which has been there for quite some time, from almost 800 levels, currently around 560 odd levels. However, on the weekly charts, we are seeing some sort of positive divergence. So what that tells me is that the stock is going to find some base very soon. Recently, also on the weekly charts, we saw that the stock witnessed a low of 528 and currently it's around 560 odd levels. But one needs to remember that the long-term structure for the stock is negative. So it's still very negative. But since the stock is approaching crucial zones of support, so that effectively means is that there could be a pullback. But then you'll have to take it with a pinch of salt, because If the stock bounces back, so somewhere around 590, 600, that would be a level where we could witness fresh selling in. But the current low is something which is very important. So 625, 630 ideally should act as a support. If that support is taken out, then we are headed significantly lower towards the 500 mark. So the levels that you need to watch out is 625, 630 on the downside, which should act as a short-term support. On the upside, it's around 590, 600. That should act as a resistance. Long-term trend continues to remain negative for the stock.
All right, the long-term trend continues to be negative for UPL. Just about time for one last query. This one is coming in from Kishore. Wants to know your thoughts on a latent view. Now, this stock, Aamar, over the last few months has remained sideways. But, if you look at a 6-month chart, it has done fairly okay. It has lost some bit of steam. From here, how is it looking poised on the charts?
We'll see the stock has bounced back. But if you look at from where the stock has actually come up from almost 750 levels. And then it had made a low of almost 320. Currently, it's around 412. So what we are seeing is that on the upside, that is towards 450 zone, 460 zone, there's a lot of selling that is coming in the stock. So what's happened is that those who did buy at lower levels, they are looking at exiting the stock, because till the time we don't see the stock breaching the 460, 470 zone, I would say that the upside is capped for the stock. And once it starts trading over the 460, 470 zone consistently, then we could say that the long-term trend for the stock has changed. Right now, the long-term trend is more or less sideways. It's in for consolidation, but above 470, once the stock starts sustaining above that level consistently, then we could see that the trend is changed and there could be a significant upside on the stock. As far as the downside levels are concerned, I would say somewhere around 390, 400 is an immediate zone of support for the stock.
All right, that's the view on latent view then. But, this wraps up our query segment for today. Before I let you go, Aamar, what are you recommending for viewers this morning in terms of stock recommendations?
Yeah, I would say the first stock is from the pharma space, and one can look at Glenmark Pharma. This is one stock which has corrected, and recently it's close to its support zones, and the long-term charts continues to be very strong. So Glenmark Pharma is one can look at, buying around the 770 levels with a stop loss of 721 and a target of 855 on the upside. And the second stock to look at is BEL. So this is one stock one can look at. This stock is very strong on the long-term charts. It's trading close to its record highs. The stock is in for a breakout. So this is one stock one can look at the current levels, or maybe a dips towards 142, 43. With a stop loss of 137 and a target of 157 on the upside. And the last stock to look at is from the FMCG space, that is Hindustan Unilever. So what we saw is that we saw a correction and consolidation in the stock, but over the past a few trading sessions, we are seeing that the stock is forming a base. So this is one stock one can look at from a trading perspective, from a short-term perspective. So any dip towards 2500, 2510 can be used as a buying opportunity with a stop loss of 2437 and then upside target of 2581.
All right, Glenmark, BEL and HUL, these are some of the stock recommendations coming in from Aamar. With that, Aamar, thanks a lot for taking out time and joining in as usual and addressing all of your queries as well. Well, with that, we've come to the end of this edition of Morning Trade. From me and the entire team, thanks a lot for tuning in. But don't go anywhere, because coming up next is Opening Bell.